All right, well, I finally decided to buy SCHD, the Schwab US Dividend Equity ETF. It's a very popular dividend company within the investing community, purely because it has a very strong compound annual growth rate for the 5 years. And I sort of held off for a while because with all the dividends that I receive, I usually just bolster the companies that I already have, just to save on diversifying a little bit too much. It's not always the best thing to diversify, heavily. So, but with that compound annual growth rate, being so high, I couldn't really say no. And we've made initial investment of 4.5 shares on the 6th of May. It cost me roughly $326. Um, the yearly income so far with that $326 is like works out to be $12, which is nothing, but over time, once we continuously invest, we'll see that number grow very quickly. But here's a quick little update of the portfolio so far. So we're now $272,000. Um, Friday, the last day of the trading week, right, we're down 1.3 thousand, and overall we're still up by 8.84%, which is just over $22,000. Current cash position is sitting at $100 there. But scrolling down to SCHD, so there it is there. So initial investment of 4.56 shares at an average price of 70.97. Currently up by 64 cents, but that's not the goal there. The goal is to reap in the dividends every quarter. All right, so the current share price is sitting at $70.05. Here's a bit of the holding breakdown. All right, so industrials and healthcare being their top two holdings by sector. And this is the top 10 holdings so far. You've got pretty well-known companies here like PepsiCo, Coca-Cola, Pfizer. So I already own Coca-Cola and Pfizer independently. So there is a question, am I going to sell those two companies and just put it into SCHD anyway? Because the annual growth rate is a lot higher, which we'll get into very quickly. All right, so moving down to the dividends. All right, so it's got a really nice dividend of 3.78% there, with an annual payout of $2.64. Now, this is the big one that everyone's really talking about. So the 5-year growth rate of 14.43%. Now, most companies, some are only growing, by 3%, 4% and 5%. Now, 14% is considered, quite high, which is why, it attracts a lot of dividend investors to get started. Now, at the bottom here, you can see that the dividend pays quarterly. For myself, I usually prefer companies that pay monthly. It's just good to see, like income coming in a little bit more frequently. Yes, it's going to be a little bit less because it's all based off an annual sort of payout, but I just like to see those little bits of payments coming in a little bit more frequently. And on the left-hand side here, you've got an amount of 60 cents per share, which isn't too bad. All right, now let's click over and look at the dividend history. All right, so the consecutive years of dividend growth. All right, it's got zero years. Okay, we'll have a look into that really quickly. And the consecutive years of dividend payments. Okay, right, 0. So let's have a little bit of a deeper dive into that. Now, you can see in 2021 they've actually completely missed a dividend there. So okay, so on the 6th month of 2021, that's when they've started to pay the dividend. In September, they've paid it, and then in December. So they've missed the first quarter payment for 2021. But let's look at the 10-year mark. In all of the previous history, it's actually looked pretty good. It's just for some reason they've just missed that dividend window there. All right, and there you can see in 2021 they've only paid 3 dividends for the year, or 3 quarters. So that's where they've that missed that first quarter dividend payment. If you would ask yourself, like, is that concerning? For me, well, not really, because I mean, you look at the 10-year dividend history; it is fairly good. I suppose you could do a little bit more research as to why that dividend wasn't paid, but so far, I still believe it's a very strong and reliable dividend paying company there. All right, let's move over to the dividend growth and just see how they're tracking over the last couple of years. So here you can see, like in 2013, every single year growing that dividend by 11%. The next year, 15%, all right, 9%, etc., etc. And as you can see there, it was only in 2021 that they've actually decreased that dividend for whatever reason. But what I do like was with that 2022 increase of 46%. I'm really keen to see what the 2023 to 2024 increases look like. So I'll be definitely be hanging around for that. All right, so moving over to track your dividends. So here's the portfolio here. So $272,000, and the portfolio yield is 4.26%. The yield on cost is slightly higher, being 4.64. The annual income, right, this is all in US dollars, right? So it used to be over $12,000, but we've had a couple of dividend cuts with BHP and a few other companies, which is disappointing. But we're still looking at $11,500, which is pretty good. So when you translate that into Australian currency, it's sitting like roughly around $17,000 per year. And scrolling down to SCHD, right, as you can see there, so we've got 4.56 shares at an average price of $70. And on the right hand side there, you can see how it's only giving me $12 per year. But definitely, if you stick around and watch the channel, you'll definitely see that grow like extremely rapidly. All right, so we're just going to move over to the dividend calculator, and with the starting principle, I'm going to put in how much money that I started to invest with in SCHD, being $326. I'm going to leave the monthly contribution at $0. The dividend yield is just under that 4%. All right, the compound annual growth rate is 14% there. I'm going to leave the share price growth at 0, and we'll study it for 10 years. Okay, let's calculate the returns and see how we go with the dividends. All right, year 1, right, you'll be earning $12 per year. Year 5, $26 per year. And year 10, $64 per year. So pretty useless, I would say. I mean, after 10 years, you're only really earning $64. But that's only implying that you're putting in the initial $326 and just reinvesting the dividends. Okay, so let's just say, for example, I know I'm going to be investing a lot of money into SCHD from now, being $1,000 per month. All right, we're going to keep everything else the same. Let's calculate the returns and see how much money we'll be making. All right, so year 1, all right, $12. Year 5, over $3,000 of dividends every single year. Year 10, over $16,000 of dividends every single year. That's quite incredible of just simply, not just reinvesting those dividends, but doing regular deposits over time. It's pretty insane how much money you can actually make. But let's just scroll back up, and let's just say you didn't exactly have that amount of money of $1,000 per month. Let's just say you only had $200 per month that you wanted to invest into SCHD. All right, and let's have a look here. So year 1, $12. Year 5, $674. All right, and year 10, you're still going to be getting $3,300 just in dividends every single year, which is quite incredible. So just something to think about there. If you did want to invest in SCHD and a couple of other dividend companies there. But that concludes the video. So if you did want to follow along into my SCHD journey, I'm going to be aggressively investing, and I just want to see how fast we can actually get this monthly income up to. Let's get it up to $20,000, $30,000. I want to push the limits on this one and see how much we can get within the next couple of years. So if you did want to follow that along, make sure you thumbs up and subscribe to the channel. It really helps out, and I'll catch you next time.